Hey everyone, welcome back to Corporate Decoder, where we uncover the hidden stories in corporate filings. Today we are diving into a document that shows how a company plans to sell annuity contracts. Let's just say things get pretty detailed and frankly a bit risky, but we'll decode it for you. This is a registration statement, an official document filed with the government that basically says these guys are ready to offer new financial products to the public. We're looking at the USL Separate Account RS, a part of the United States Life Insurance Company and the City of New York. They're offering something called Portfolio Director NYSP, which are basically contracts for retirement plans that let you invest in different options, some safe, some not so safe. Let's talk money, the fees and expenses. You've got your base contract expenses, which are currently set at 0.20%. That might sound small, but it adds up. Then you have investment options or fund fees. These can range from a tiny 0.015% up to a much bigger 0.91% for the most expensive options. These guys are looking to sell these contracts pretty soon after this registration statement becomes official. They're essentially telling the world, hey, we've got these retirement products and here's what you need to know before you buy. Here's a reality check right up front. This contract is not simple and it carries risks. You could actually lose money, including your initial investment. It's definitely not for people who need their cash quickly or like to trade a lot. It's built for the long haul. This is where they lay out all the potential downsides. There's the risk of loss, which they spell out pretty clearly. You can lose money and it could be a lot. Then there's the variable investment option risk. This means the money you put into these options depends on how well the underlying investment is doing. If the investments go up, your money goes up. If they go down, your money goes down. Essentially, you are taking on the investment risk yourself. There's also a risk if you use their advisory program. If you have an advisor who manages your investments through this contract, the fees they charge could eat into your death benefit, and other guaranteed benefits plus those fees could even be hit with surrender charges, taxes, and penalties. And in today's world, they have to mention cybersecurity risks. They rely on computer systems. So if those systems are attacked or fail, your data and your investments could be at risk. Now for the fun part, the actual investments. They list out a bunch of different funds you can choose from. For example, there are Vanguard Target Retirement Funds, which automatically adjust based on when you plan to retire. They also have index funds like the Fidelity 500 Index Fund with really low expenses. Take the Fidelity 500 Index Fund, for instance. Its current expenses are a measly 0.02%. That's incredibly low. Compare that to the Impax Global Environmental Markets Institutional Shares, which has a much higher expense ratio of 0.89%. You can see how those fees alone can really impact your returns. Overs in the Fidelity Fund, you pay about $20 a year in fees. But in the Impax Fund, that would be about $900. That's a huge difference. Let's look at the transaction expenses. There are no surrender charges, which is good, but there is a fixed account plus excess transfer charge of 5% if you move too much money out of that specific account in a year. So while they don't charge for cancelling, they do have ways to discourage moving money around too quickly. The advisory program fees, which are paid to your investment advisor, can also reduce your overall contract value, including the money you put in. What's interesting here is that while USL deducts these fees, they say they don't pay any of it to themselves. The fee is between you and your advisor, but USL indirectly benefits if their affiliate VFA manages your money. Even your vote on how the underlying mutual funds are managed is passed through to you. This seems fair, but they do mention that a small number of contract owners could end up deciding the outcome of a vote. So make sure your voice is heard if you choose to participate. When it comes to taxes, these contracts are wrapped in retirement plans like 403 BIE, Sabiumsund 401 Kekyu says, which generally means your money grows tax deferred. That means you don't pay taxes on the earnings each year. But when you take the money out in retirement, you will pay income tax on it. It's basically kicking the tax can down the road, not eliminating it. And be careful if you need to take money out before age 59 and a half. You could get hit with a 10% penalty tax on top of your regular income tax. There are some exceptions for things like disability or a first-time home purchase, but generally this is a long-term savings vehicle. The United States Life Insurance Company in the City of New York, or USL, is the company behind this. They are an indirect wholly owned subsidiary of Corebridge Financial Inc. This means your money is ultimately tied to the financial health of this larger parent company. Overall, this prospectus paints a clear picture of a product designed for long-term retirement savings. It offers flexibility with various investment options and even a loan feature for those in qualified plans. However, the risks are significant. You can genuinely lose money, and the fees, while sometimes low, can add up. The complexity of the contract and the reliance on the company's financial strength are key points to consider. They are trying to procure your valuable service, but it's crucial to understand every aspect before committing your retirement nest egg. Alright, that's our deep dive into this annuity contract filing. What are your thoughts on these investment options and the associated risks? Let us know in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe for more corporate deconstructions. And hey, join our amazing Discord community linked in the description for even more insights and discussions. Thanks for watching. See you next time.